Once again, guys, we are on break-even point analysis. We need to do this most important part of manufacturing accounting. What is it that we are expected to know on the topic? We are required to define break-even point, to explain the importance of calculating break-even point, and to calculate the break-even point and comment on the break-even point. Now, when commenting on break-even point, it is done in two parts. First, we compare previous year break-even with current year. We also compare break-even with units of production. Let us start. Defining break-even point, we can define it as the number of units that a business must produce and sell to cover all fixed costs. Some might say the number of units that a business must produce and sell before it starts making profit. Now, at this point, the business makes neither a profit nor a loss. Why is it important to calculate break-even point? First is to determine the minimum number of units to produce to prevent losses. The business can know in advance so that any potential problems of low production can be foreseen and to start corrective action promptly before losses occur. We calculate break-even point also to provide information to compile budgets to ensure that profits are achievable, and to identify efficiency need to be improved to produce the required number of units to make a profit. As you are going to see, you can tell how many units to produce to achieve the amount of profit. Let us check. Now, how do we analyze? We need to know some few concepts. The first one is contribution per unit. Contribution per unit is the amount each unit contributes towards the covering of the fixed cost and the profits. Let us check an example. If an item sells for 20 rand and its variable cost is 13 rand, then each unit produced and sold will contribute 7 rand towards the covering of fixed cost and profit. So when we are talking of contribution, we are just saying in simple, how much is the product contributing towards our fixed cost and our profit. Now, contribution per unit is calculated by saying selling price per unit minus variable cost per unit. This selling price per unit might not be given easily. We normally calculate it by saying our total sales divided by number of units sold. Then variable cost per unit, from our previous lesson, you have noticed that it is our direct material cost plus direct labor cost plus selling and distribution, all divided by total units produced. Then this will give us our variable cost per unit. So selling price per unit minus variable cost per unit will give us our contribution per unit. Now, we have said balance break-even point refers to the number of units a business must produce and sell to cover all fixed costs, or before a business can start to make profit. The formula can be calculated in units. It can also be calculated in value. I want you to notice the difference. First, in units, we say our total fixed cost. This is what we want to cover. Divide by our contribution per unit. Our contribution per unit is selling price per unit minus variable cost per unit. Your answer in units. You need to say something on the units. It is very important because the examiner will be looking at that. We need to differentiate this as number of units and any other figures that we write which represents the amount in rands. So whenever you are talking of break even, you need to show that these are units. You can write the name of the product, 10,000 shoes, 500 dresses. You need to add, or simply 500 units or 10,000 units. Then break even point in value, we use the same formula, total fixed cost divided by selling price per unit minus variable cost per unit, but we multiply now by selling price per unit to give us the value of. So our answer now will be in rands, not in units. Let us do a worked example on break-even point analysis. We have information that we are given sales amounts to 615,000, direct material cost 110,700, factory overhead costs 246,000, selling and distribution costs 61,500, direct labor cost 114,800, and administration cost 102,500. We are also provided with additional information. Selling price per unit, we are told it is 150 rands. Then the business produced and sold 4,100 units. In 2019, our break-even point was 4,600, and in 2019 they also produced 4,500. What are we required to calculate? We want to calculate the use the amounts above to calculate the break-even point in units and in value, and comment on the calculation above. Should the business be satisfied with their break-even point and production level? Let us check the workings. Now there are 5 steps that we need to do or to know when we are calculating break-even point. The first step, we need to calculate our total fixed cost. It can be given as a figure, or we have to calculate. Remember, we have said in general, factory overheads and administration costs are our fixed costs. So it was this case in this question. Then the second step, you need to calculate your selling price per unit. Your selling price per unit, it is sometimes given, like in this case, or your sales divided by number of units that were sold. So depending on the information given. Our variable cost per unit, we are going to say now our direct material, direct labor, and selling and distribution divided by total units produced, or it can be given. So we need to understand whichever way. Then our fourth step, you calculate the contribution per unit by simply saying selling price per unit minus variable cost per unit. Now let us calculate our break-even point. For this one, we have already information that we are going to use. Our fixed costs, our formula says total fixed costs divided by contribution per unit. Our fixed cost, we know our factory overheads 246,000 plus our administration 102,500, all divided by 150 minus 70. This will give us a fraction, but like I have said, we know with units we cannot calculate a point something of a unit. So to break even, we just produce that unit in full. So we are going to disregard here the method of rounding off from maths. If there is a fraction of a unit that we need to produce, we simply produce as a whole number. That is why now we have 4,357 units. So you need to remember that whenever we are calculating break even, let us try to use whole numbers. Our next thing is to comment we are expected to comment on break even. How do we comment? From our definition, it is the number of units a business must produce and sell to cover all fixed costs. Now, when we are commenting, first we said you can comment break even with your production. We can comment break even versus break even. So in two parts, break even versus production, break even versus break even for the previous year. Our first step, compare the break even units for the current year with production units for the current year. We are going to see now, if units produced are greater than break even units, what must we say? The business must be satisfied because they are making profit. Just to break even, you need a certain number of units before you start to make profit. So if we produce more units than the break-even units, the business has all the reasons to be satisfied because they are making profit. Now, the amount of profit depends on the number of units after our break-even units. The more the units, the greater our profit. Now, the second part, if number of units produced are less than break-even units, the business must not be satisfied because they are making a loss. So they are producing less than, to break even, before they can start to make profit, they must produce the break-even units. In this situation, they are not even producing enough to cover all fixed costs, which means they are making a loss. So whenever you are commenting, that is what you need to do. Compare your break-even units and your production units. If we produce more than break-even, the business will be satisfied. They are making profit. If they produce less than break-even units, they must not be satisfied. They are making a loss. Remember to quote figures. We don't just write statements. We have to quote figures, as you will see from the answer that we have produced. From our previous question, we have noticed that units produced were 4,100, and to break even we wanted 4,357. So our answer will be like this: units produced decreased by 400 units. We are comparing from previous year. The business produced 4,100 units, while break-even point was 4,357 units. Therefore, the business should be satisfied, should not be satisfied. They are making a loss. Instead of saying they produced 4,100 and break-even point was 4,357, you can simply say the business produced 257 units below break-even point. Therefore, the business should not be satisfied. They are making a loss. Now, how do we comment when we are given previous year break-even point to current year break-even point? We compare the two, previous year with current year. Now, how do we know what to say? If current year break-even point is greater than previous year break-even point, it means the business require now more units before it starts to make profit. It is a sign of inefficiency and poor control of expenses, as it is now costly to produce one unit. The business must not be satisfied. On the other hand, if the current year break-even is less than previous year break-even, it means the business require less units before it starts to make profit. It is a sign of efficiency and good control of expenses. It is now cheaper to produce one unit. The business must be satisfied. Let us see how we can comment from our previous question. In 2018, break-even point was 4,500 units. In 2019, break-even point is 4,357 units. The business requires now 143 units less to break even than in 2018. The business must be satisfied. They improved in efficiency and on cutting expenses. Let's continue with our commenting. there are some important points. I have already mentioned them. When calculating break even, always remember to write units to differentiate the figure from cost. Then, since break-even point is referring to units to be produced and sold, always round up whenever there is a fraction of a unit. Then, when commenting, always include figures in your explanation to earn full marks. Now, break-even point is also used from the importance. We want to know how many units must we produce to earn a certain amount of profit. So calculating the number of units to be produced to achieve a profit figure, we simply modify the break-even formula a bit. We are given some information which we are going to use. Fixed costs 1,404,000, variable cost per unit 149, selling price per unit 249, number of units produced and sold 36,000. The question is calculate the number of units required to be produced and sold in order to break even, and calculate the number of units required to be produced and sold to make a profit of 100,000. Our break-even point, it is our total fixed cost divided by contribution per unit. We have noticed it is 14,040 units. So to cover all fixed costs before we make a profit, we need 14,040 units. Now, how many units must we produce now to make a profit of 100,000? The formula will now act as the same formula that we use to calculate our break-even point, but we are going to add the required profit to our total fixed cost. We are adding our required profit to our total fixed cost. Then we divide by selling price per unit minus variable cost per unit. So in this case, our total fixed cost was 1,404,000 plus our required profit 100,000 plus our required profit 100,000. This divided by our contribution per unit, selling price per unit minus variable cost. This will give us 15,040 units. So for this business to make a profit of 100,000, they need to produce and sell 15,040 units. If they only produce 14,040, there is no profit, there is no loss. To make a profit of 100,000, they now need to make 1,000 more units. Now, like yesterday, we are going to use our textbook for the activity. We are going to answer task 13.11 on page 448. Our answers must be in our workbook page 116 to 118. We are only doing that activity for today. There are very good questions from our textbook, and good luck.